Hello everyone, wishing you a very happy spring morning. My name is Charmaine Houvet. I am an IWFSA member. You are joining us for today's joint partner session on transformation in the banking sector, proudly brought to you by International Women's Forum South Africa, ABSIP, WDBIH, and the Johannesburg Stock Exchange. I would like to welcome Ms. Irene Shandley, the President of the International Women's Forum of South Africa, who will provide further insights into this morning's event and the conversations that will unfold.
Thank you, Charmaine. Ladies and gentlemen, delegates, welcome to you all. We would like to welcome and thank our joint partners here with me in studio today who have helped make this event possible. Thank you. Today, we're honored to bring together a wide range of respected and successful leaders with a deep passion for our country to have a discussion on how to ensure sustainable transformation of the banking sector in revitalizing economic growth and inclusion. Since our most vulnerable communities, specifically women, are impacted by these pressing economic issues. We are especially pleased and humbled that you, Governor Lesetja Kganyago, and our formidable panel of speakers consider today's conversation critical enough to take time out to share your thoughts and knowledge with us and our delegates. Over the years, South Africa has earned global recognition for its robust financial infrastructure, systems, and institutions that it has built. In particular, the vision of building a democratic country with deliberate frameworks of Black economic empowerment to extend the participation of historically excluded individuals and communities into the economy. There are, however, current concerns that the culture of transformation is not consistent with the goal of transformation and economic inclusion. We know an African saying that says, "When the music changes, the rhythm of the dance must also change." Currently, the rhythm of the dance is not in sync with the music. We all know that the financial services sector plays a central role in the promotion of economic growth, job creation, and prosperity for our country and its citizens. Over the past 26 years, we've witnessed evidence of good progress being made in developing more solid systems and processes that promotes good corporate governance. However, not enough progress has been made regarding transformation and financial inclusion, as the triple BEE scorecard reflects. The South African financial services sector is untransformed. In 2021, the Banking Association of South Africa, BASA, published a transformation report compiled by a leading research firm and using data supplied from member banks. This report reflects the extent of transformation in the banking sector. What interested me is the fact that the report on financing Black SMEs increased by 13% to 28 billion. Of interest, however, is how much was the financing of women-owned businesses, and what is this as a percentage against the total financing of businesses by the banking sector? COVID-19 has also exposed our deep inequalities and the effect of the persistent economic and social gaps which chronically disadvantage women, children and black people, SMMEs, township and rural economy businesses, and the youth. It will therefore be important to ensure that the ecosystem consisting of the board, managing executives, shareholders, staff, unions, and the broader communities work effectively and collaboratively together in driving the change needed. The object of today's event is to address what the banking sector can do to galvanize institutions, corporations, and individuals to accelerate and sustain transformation so that we achieve the desired change of inclusive economic growth. This event will have clear, actionable outcomes that will be shared by our partner Polo in a closing comments. So to kick off today's event, I would like to welcome Governor leteka-radebe, who is joining us virtually, and our joint partner for this event. Here in the studio with me, the President of ABSIP, Ms. Polo Leteka. Polo will conduct a fireside chat with the Governor of the Reserve Bank. So whilst we wait, we'll get to a video of Gloria Serobe.
ABSIP must make it its business too to sit down with those professionals. This time, they are now accounting to you in terms of why are we where we are and why is it that we can be associated with a big destruction of our very communities now, and it is conspicuously by us. And what does that mean? Because the stakes are high. I think I would like to see ABSIP doing that side of things as well, which means ABSIP looking after the management side and the professional side, but ABSIP must give itself some job now to say policyholders, depositors, beneficiaries of retirement funds, if what it is said to have been done by some of the asset managers, as we understand it to be, because those asset managers are managing whose money? Our money as well.
Governor leteka-radebe, good morning and welcome. Thank you for joining us this morning. We appreciate the opportunity to partner with the IWFSA, WDBIH, and the JSE to strengthen our inputs. And again, Governor, we are honored to have you join us this morning. I want to kick off, Governor, with a bold claim that says that unlike what the BASA report said around transformation in the banking sector, we remain of the view that the financial services sector is largely untransformed, and this is based on anecdotal evidence as well as some of the events that have taken place in the sector in the recent past. It is due to this, Governor, that as ABSIP, we were prompted to conceptualize and establish a transformation series that we've been running over the past few months, where we wanted to critically analyze and understand what are the successful case studies that we can learn from so that we can do more of those, but also what are the things that have failed so that we can do less of those. And Governor, I'm sure you will agree that we cannot do this on our own, and we've therefore called on people like yourselves, various experts, captains of industry, government and policymakers, as well as other stakeholders, to help us chart a new way to a fully transformed and inclusive financial services sector. Today's discussion theme, which is a sustained transformation of the banking sector, forms part of this broader conversation on the state of the financial services sector, and more so will focus on the solutions for the issues that we have identified so far, Governor, because we don't want to dwell too much on the problems, but we really want to move forward to say what needs to be true for us to say that the financial services sector is truly transformed for your ordinary South African. We're also looking, Governor, to incorporate all the gems that are going to come out of today's conversation, of course, combined with the other conversations that we've had so far around transformation, with the intention of developing what we call a white paper, which we will table with all our stakeholders, including yourselves as the regulator, and of course, government, and with the intention of ultimately coming up with what we call a blueprint on transformation for the financial services sector beyond the scorecards. We would also like to make another clarion call, Governor, to our president, to the banks, and the boards of the banks, the Reserve Bank, the National Treasury, the PIC being a very significant stakeholder in this market, and various other related stakeholders, to continue to engage us on how we can collectively ensure that real, genuine, and tangible transformation as an imperative is achieved by institutions in the financial services sector. Women make up, as you know, Governor, more than 50% of South Africa's population. However, they continue to be underrepresented in decision-making positions across the economy. This is despite there being specific targets in all our BBBE scorecards across various sectors, but also, the Employment Equity Act has got very specific targets around ensuring that there's proper representation of gender and race. And also, government has, over the years, come up with other gender equality policies that it has pronounced upon. And despite all of this, we don't seem to be making the kind of progress, Governor, that we need to be making. And that's part of the reason why this conversation we're having today is so, so important. So at the end of the day, Governor, we will want to know from you, what do you think should be done differently? Because we've got all these legislative policies in place, we've got all these other frameworks that have been developed. What should we be doing differently?
Thank you very much, Pulu. The thing of what should we be doing differently, we could be asking these things. The point is that what we can't keep on doing is to throw legislation after legislation after legislation and hope that that is what would change everything. Well, in the video clip, Gloria made a call to ABSIP, and ABSIP can't sit here and be the complainant. ABSIP defined itself as a motive force for change in the transformation sector, and ABSIP was at the table, was a signatory when the financial sector charter was agreed to. And I think that for me, a fundamental mistake was to basically focus so much on ownership and left the focus of the important aspects of that charter that were captured. And Gloria, again, in her snippet, points out to these things, and that for me is particularly important. But I think that isolating this issue in the manner that we have is problematic, and I would like to locate it within the following context. I would like to locate it within the context of achieving inclusive growth. And since we are talking about the financial sector, inclusive growth then should come through a financial system that is efficient, that serves all South Africans, and that is essential to our nation's ongoing development. The issue of inclusivity has gained increasing attention across the world, and nowhere is it more important than in South Africa. It is widely accepted that we have one of the highest levels of income inequality in the world. The recent unemployment figures released by StatSA show that fewer than 38 out of every 100 South Africans of working age actually have a job. We have no option but to find solutions that are sustainable and impactful. Today, I will focus on the SAP's role in overseeing the soundness and stability of the banking system, because as we talk about these things, we forget that this is a very important precondition to the transformation of the sector. The Financial Sector Regulation Act provided the SAP with an explicit but shared mandate to protect and enhance stability of the financial system. We monitor the financial system for risks, and we make policy decisions aimed at bolstering the resilience of the system and mitigating the build-up of financial stability risks. This has been part of the introduction of the so-called twin peak approach to financial regulation, which located the Prudential Authority within the South African Reserve Bank, mandated with supervising banks, insurance, and financial market infrastructure. And I appreciate that today we decided we're just focusing on banks. But focusing just on banks does not take cognizance of the financial sector we have, which is a financial sector that is dominated really by conglomerates that you find in every financial house, some form of an insurer, some form of a bank, and some form of other financial services. The reason that I am providing this outline of financial stability is because it is an essential condition for the achievement of inclusive growth in South Africa. Financial stability is a public good, and everyone benefits from its existence and everyone loses out when it is not there. If you think financial stability is a luxury, try financial instability and see what it means. Financial crises are costly to the whole society. However, the poorest and the most vulnerable lose out most during periods of a crisis. First, because they can't insulate themselves from the impact of the crisis to the same extent that more powerful actors in society can. Second, because financial inclusion is often impaired during periods of crisis. So when banks are under severe financial strain, they become more risk averse. As a consequence, lending to perceived riskier borrowers, such as small and medium-sized enterprises, tend to decline. Conversely, a well-regulated and stable financial system creates fertile ground for increased financial development, and well-established research that we could decipher from the bank side confirms that financial development, underline that, financial development reduces poverty and inequality while making a substantial contribution to economic growth. So, South Africa.
Governor,
Yes,
sorry to interject there. I just want us to go back to the issue of inclusive growth, and I know that inclusive growth is beyond just the inclusion of women. It's actually the inclusion of every sphere of our society. But I think there's also evidence that suggests that when you include women, you actually enhance the chances of the broader society being included, purely because of the impact of having women economically empowered, what that impact means for your family, for your society. So perhaps before we move to the regulatory role, let's just maybe take a step back and say, how does the inclusion of women and therefore the inclusion of the broader society contribute, for instance, to ultimate financial stability, Governor? Is there a suggestion that the inclusion of women could somehow threaten the financial stability of the banking sector and therefore have the other consequences that you are starting to allude to?
That would be very wrong. I cannot think of a society that would think that it could succeed by excluding 51% of its population from meaningful economic activity. It just would not work. It's economic inefficiency because it suggests that society does not appreciate that resources are limited and that you need to deploy all the resources that you have as a society to achieve societal objectives. So let me put it this way, because you said just step back. I was not stepping back. I was trying to set the thing forth and say to you, societies progress, societies raise the standards of living, and when we talk of meaningful transformation and meaningful inclusion, we necessarily talk to the fundamental and structural nature of the transformation of economies. And the manner in which I look at it is society needs to be asking how it combines capital, labor, and technology to raise the standards of living across the economy. And the countries that have succeeded in fundamentally not just transforming their societies, but raising the standards of living in their societies have demonstrated that they are capable of combining all the resources at their disposal, capital, labor, technology, and within labor, women are actually a very important component. So for me, as we talk about women empowerment, I want us to understand it's not just, oh, please let us include women. It is because it is fundamental to the growth trajectory of our economy. You cannot talk of an economy that is going to grow, that decides it's not going to use 51% of the resources that it has. So for me, it is crucial if we are to talk about transformation.
And thank you very much, Governor, for that, because that's a very critical point that you make. And having that appreciation, Governor, and the role that the Reserve Bank plays, which is, of course, to ensure that there's stability and that our funds are safe as we deposit them into the banks. What role then do you play as the Reserve Bank, especially when it comes to diversity, whether it is at a board level, because we know that the Prudential Authority actually does, we know that you do not appoint the board, so I don't want to give that impression, but certainly, banks would come to you and say, these are the people that we are thinking about. What role do you play in asking questions around I don't see diversity, whether it is gender diversity, whether it is race, whether it is, I suppose, cross-generational? What role does the Reserve Bank play, and what role should it play in that conversation?
Boards are appointed or elected by shareholders. Management is appointed by the boards of the banks. There are instruments in our legislative framework that deal with employment equity, and they should be deployed in that manner. What you can't do is to say that we have got financial regulation, we are going to use it for all of these things. You have got to deploy instruments for what they are meant to be achieving. And I think that as you were saying this thing and you say that what is your diversity and all of that, of course we do ask those questions, but we ask them before the boards come to us. As part of our supervisory responsibility, we will ask as banks, what is your succession planning? What is your what are your diversity plans and so forth? Because let's get things clear here. The Employment Equity Act provides for companies in South Africa to have employment equity plans and execute them. If the banks or any regulated institution is non-compliant with other pieces of legislation, it could actually pose a risk to financial stability.
Yes.
But it is not for us to enforce those things. It's for us to say, are you compliant with all of those things? Because you see, if you are not, you are going to have a problem. For me, I put it this way. If you think that compliance with legislative prescripts is costly, try non-compliance and see how costly non-compliance is. And the regulated industry across the world, where it had failed to comply with legislative prescripts, ended up with massive costs, whether it is their lack of adherence to anti-money laundering prescripts, or whether they fail to comply with the combating of the financing of terrorism and legislation, or whether they had failed to comply with capital and liquidity requirements, it becomes very costly. So let's get things clear here, and I know that later on there are people from the financial sector who will come in. If you think compliance is costly, try non-compliance and see how costly non-compliance is.
No, thank you very much for that, Governor. And I think what you're saying is that as banks and other institutions come to you, to inform you about some of these changes, you do ask the questions around, are you compliant with other legislation? So we probably need to focus our attention on, do these banks actually comply with the Employment Equity Act? Do they comply with the BBBE Act? Are we seeing diversity and things like that? And raise these issues as an advocacy.
But you will be raising the question. You'll be raising the question with the wrong people, because it's the Department Commission on Employment Equity and the Department of Labor that is responsible for the implementation of the Employment Equity Act. It is their job. That is where the thing should be lying. Understand that banks have, one of the things that we have to get the banks to have, and all banks have this, is to have compliance officers. And it is the responsibility of management to make sure that they comply with the prescripts. I only have about 200 supervisors. I can't go with my 200 odd supervisors and say, are you compliant with the Occupational and Health Safety Act? Are you compliant with the Employment Equity Act? Are you compliant with this act, and all of that act? Our responsibility in the SAP is to administer particular legislation. So we administer the Financial Sector Regulations Act in as far as prudential regulation is concerned. In as far as financial stability is concerned, we administer the Banks Act to the extent that we have got to oversee the banking sector. We administer the Insurance Act to the extent that we have to deal with the insurance sector. We administer the National Payment Systems Act. We have got particular legislation that we administer. And just to clear this one, so because I had heard this thing before, the banks don't come to ask for approval to appoint somebody to their board or to their executive. That is not what they do. They come to us and they say, based on your test of fitness and propriety, this is the person we would like to appoint. We will subject that person to a test of fitness and propriety and then say to the bank, we have no objection, or we have got objections on this. That's where our role ends. The board can still, even when we said we object to this, they can still go and appoint because it is within their power to do so. But then they live with the consequences. Flip this and put it the other way around. Let's suppose the Reserve Bank was to say, you can't appoint Gloria, you must appoint Polo. And things go wrong. And then the board comes to us and they said, you see the person you said we must appoint, look what is happening. So we can only say, we object or we do not object. It is the task of the board of an institution to oversee the functioning of that institution and hold the management accountable.
And we appreciate that, Governor, and thanks for that clarification. But I do think that we just need to think a little bit more carefully around how we ask questions around, because you made a very important point earlier around the importance of stability of the banks. And the reality is that if the banks are not reflective of the people that they are supposed to be serving, I do not see their relevance and staying power going forward. If the people that they are serving do not look like the people who are serving them. So perhaps it's a conversation that we can continue to have at a different time or on a different platform. Governor, I would...
You are not going to get away that lightly. You are not going to get away that lightly. ABSIP represents black professionals in this sector. At some stage, not so long ago, a few months ago, out of the 6 big banks in this country, 4 had black CEOs. 4 had black CEOs. And 3 of those CEOs could actually be counted as having at one stage or the other have had a relationship with ABSIP. So ABSIP can't get away that lightly and say this thing. We have got to say ourselves as professionals in this institution. You can ask me what I'm doing in the Reserve Bank, and I'll give you chapter and verse of how I have transformed the Reserve Bank. We have got to be asking ourselves as black professionals in these institutions, what have we done for the transformation agenda? And stop saying the banks, this, the banks, that. Shareholders don't run these banks. These banks, not just banks, by the way, corporates too, are run by management. Management has got insider information. Management has got more information than shareholders could actually even think of. And if you look at the South African financial sector, in the big ones, none of them have got a controlling shareholder. So they all raise capital from a variety of shareholders, and that gives management a lot of power to the extent that they deliver the returns that the shareholders are looking for. So we must not just look elsewhere for this transformation. We need to ask ourselves, as black professionals in this sector, in positions of authority, in positions of management, what is it that we are doing for the transformation agenda?
Absolutely, Governor, and I agree with that, and I don't take it as a criticism, by the way. I do think that it's an important point that we also have the responsibility, as we occupy these positions of importance, that we drive the transformation agenda. But I think there's also the reality that sometimes it is a board or it is a shareholder decision to either appoint a man or a woman or a black person or a white person. So we cannot run away from that also, but I'm not trying to take anything away from what you said. But Governor, going into the thing about transformation, and I think you made this point quite eloquently earlier, is that it's not really about just the ownership component, nor is it even just about the representation of black people or women at a board level or senior executive level. It is also about, when we talk about the transformed financial services sector, what does it mean for your ordinary South African? Does a guy from Gungundlovu understand what we say when we mean that the financial services sector is transformed? Do the products that they receive respond to their needs? Or are they still the same products that they were there, whether there were black people in the banks or not? What role, what role can the Reserve Bank play again, in promoting the transformation of the actual services that people play? Or what do you think, maybe let me put it differently, what do you think we need to be doing differently so that when we talk about the transformed financial services sector, your ordinary South African feels it in the type of product and service that they receive from the financial services sector?
Let me go back and say that in our discussions on the transformation of the sector, we have spent so much time on ownership of the sector. That is important, but we just spent an inordinate amount of time on it. And I think first following on that one emerges from the questions you were asking, which has to do with management and control. And I think that is the other that we had focused on. But inclusive growth is necessarily going to be about what product and services does the financial sector offer. And I know we have got KGB Bungani here, and you must put him on the spot. At some stage he was in the Financial Sector Charter Council, and say that when we think of the Financial Sector Charter, ownership was just but one component. Management and control was another. Fundamentally, what was going to change this sector was the commitment of the Charter to lending to SMMEs, lending to women businesses, lending to transformative agriculture, lending to transformative infrastructure, and all of those things. In the end, as we migrated to the BEE code, those things ended up being residuals because the emphasis was elsewhere on ownership and so forth. And it's ownership stuff. It's important. And I don't know how many of you have the phones here. I don't know how much of Apple Steve Jobs owned, or how much of Microsoft Bill Gates owns. And you can go the world over and look. If you thought of the big global banks and find out who are their controlling shareholders, you will not find a controlling shareholder. They all mobilize capital, they mobilize shareholders, and at the heart of it is management, because management has got this insight. But the rollout of product is also an issue about management, because if you do not come up with players in the sector, you professionals in the sector, you are the ones who come with new product, not the regulators. All that we do is to make sure that the product that you had come with, in which activity do they fall, and if we regulate that particular activity, whether there is enough capital and liquidity for the rollout of that product. That's it. That's it. The Reserve Bank has got an important role because we run the national payment system. And for many people, financial inclusion means access to particular services within the financial sector. And South Africa has made significant progress. The latest FinScope report shows that access to a formal bank account has grown from 67% of adults in 2012 to 81% in 2019. In 2019, just over 9 in every 9 adults made use of a formal financial product or service. That, for me, is transformative. It is not because the financial sector was trying to be nice. No. It was because it was profitable to do so. And so within the national payment system space, what we have done in the Reserve Bank was to create an innovation hub. And in that innovation hub, fintech startups can come and get regulatory guidance. They can play in our regulatory sandbox. It is an important hub that allows for the development and emergence of new products. And it is something, almost every central bank does it, but our innovation hub has actually been very vibrant and has provided a lot of support to startups that had come to us looking for support for their innovative ideas.
No, thanks very much for that, Governor. And it's a very important development that you're talking about. What I'm hearing you say, Governor, right from the beginning, at the beginning of your submission, was that we probably need to be, because part of what we're trying to do here is to figure out why is it that the scorecard is not giving us the type of outcomes that we wish to have. And what I'm hearing you say, Governor, is we almost need to turn it on its head. In terms of prioritization, because currently it's ownership, management, employment equity, and all those other things. And what you're saying is that the issues of access are actually right at the bottom, and therefore that's why they are seen as residual. The issues of SME financing are right, somewhere towards the bottom of the scorecard. And if you're to turn it on its head and also rethink the allocation and the emphasis of the targets, we might actually start seeing the kind of movement that we want to see. However, Governor, I would really like to hear your personal opinion about, whilst you've created this innovation hub, do you feel that an entrepreneur in Seshego feels that now that we are all reporting that the banks have got level 1, level 2, level 3, their business or their livelihood as a consumer is better off today than it was before the scorecards? That's number one. Number two, yes, we have one of the highest penetration rates in terms of, access to bank cards. But there's also another statistic that says, although 81% of our population has got access to the bank, they hardly ever use it. They use it they get their salary today and they withdraw all the money tomorrow, and that's the full extent of it. Can we really say that 81% represents inclusion? Because for me, that is not people utilizing the full potential offering of financial services that they could potentially get. I don't know what your thoughts are on that, Reserve Bank Governor.
Well, you said my personal views.
Yes.
One day my term in the Reserve Bank will end, and I will be able to express personal views.
Okay, speak as the governor then. I'm giving you permission to speak as governor.
Of course, Polo, the statistics I gave you are statistics with respect to transactional banking services. I did talk about the 9 in 10 South Africans who are having access to other financial products. And those financial products do not necessarily have to come from the bank. The sad reality for South Africa is that we seem to be valuing our dead given our culture. And one of the fastest growing products is funeral cover. I mean, you just have to look at the press and find out how many of these are being advertised. And poor, this is basically insurance. That is what it amounts to. What we didn't touch on, Bulu, and these products are important, and you didn't touch on this, and I appreciate that, because one of the problems I have had, and I sit in this debate in the Global Alliance for Financial Inclusion, had been that people think financial inclusion is like shoving credit down the throats of the poor, and that is not quite financial inclusion. We talked now about access to all of these products, but access to credit is also a very important thing. All that you have to do is to make sure, and South Africa has been a leader in this, because access to credit has to be tested against affordability. And so we have got to be looking at all of those other products. And so, Polo, when you talked about these products, it's not just products for the individuals, it's products for businesses, it's products for entities. And so that scorecard, that financial sector charter scorecard that we had targets for infrastructure, we had targets for agriculture, we had targets for access to credit by SMMEs, and all of that stuff. And that for me is what people actually look at. But and also understand that the financial sector is, to the modern economy, what the heart is to a mammal.
Yeah.
Once the financial sector stops functioning, the economy stops functioning. Just as if the heart of a mammal stops pumping, the mammal dies. And such is
we don't want to die, Governor. Sorry, Governor, our time is completely up. I think we are like 3 minutes out of time, but this has been exceptionally wonderful, and thank you so much for being very generous with your time and your thoughts, and we'll take this conversation forward. Thank you so much, and we'll continue to engage with you with Leila and Faith later on this morning.
The FSC has done as much as it can. I don't think we're going to see more improvement in terms of transformation from the current FSC. We're just not going to do that. Because why? Because if you look at management and control, which is defined very broadly, it only accounts for 15 out of 100 points, okay? So, and banks, all the banks can pretty much, they are where they can be and they're comfortable with it. They're not going to, change things and play cartwheels late. And clearly there's a culture there, which is it's who you know. Who gets you into a deal is not a democratic process. It's about who works on a deal, who's a rainmaker, and the rainmaker determines who they're going to get into their team. And the same applies whether you're in trading, whether you're in corporate finance, whether you're in private equity. That's just how things work. And unless that culture changes, it's going to be difficult to drive transformation in investment banks. And clients have a big say here. And to the extent that we haven't transformed the economy, in other words, it's still owned the way that it is, you're not going to have a lot of black people and so on. You're going to find, Africans, including women, in those areas where you serve your people, including government. So clearly, all banks and insurance companies, where you deal with government, that's where you're going to find black people. All banks have a development bank license, but none of them really use it. Why? Because no one cares, including a prudential regulator. If they use those development bank licenses, they could have funded a lot more SMEs, including people who are, black people in the financial sector.
Good morning and welcome to Sustained Transformation of the Banking Sector in Revitalizing Economic Growth and Inclusion, hosted by the IWFSA, WDBIH, ABSIP, and the JSE. That's a lot of acronyms. My name is Leila Fourie, and I'm the CEO of the Johannesburg Stock Exchange, and I have the pleasure of facilitating today's incredibly esteemed group of panelists. Joining the Governor of the Reserve Bank on the panel are the CEO of Standard Bank South Africa, Mr. Lungisa Fuzile. From ABSA we have Sipho Pityana. The CEO of the Financial Sector Transformation Council. In studio with us is Ms. Phumla Ngapani. And the Group CEO of African Bank, Mr. Kennedy Bongani, together with the BEE Commissioner, Ms. Zodwa Ntuli, and the CEO and Executive Director of the PIC, Mr. Abel Sitole. We have a jam-packed lineup and lots to get through, so let's get straight into it. South Africa has made steady progress over the past 26 years to transform the financial services sector. However, much more needs to be done to deepen and to broaden the transformation and change so that all South Africans, especially those that continue to experience marginalization and exclusion, can enjoy the fruits of democracy. The financial services sector plays a central role in the promotion of economic growth, job creation, and financial inclusion for the country and its citizens. To kick us off, I am going to turn to Phumla, the CEO of the Financial Sector Transformation Council. Looking at transformation to date, Phumla, in the financial services sector, progress has genuinely been slow, and representation remains disappointingly low. What do you think are the key challenges in influencing the pace of transformation?
Thank you, Leila, and good morning to the distinguished panelists as well as the audience. Leila, it was in 2002 when the NEDLEC Summit resolved for transformation to be prioritized by the financial services sector towards an inclusive and growing economy in the South African context. And it is my considered view that the sector has been given considerable time to accelerate the pace of transformation in accordance with the approved framework, as well as the code and its predecessors, which had been designed on the basis of sound principles. And had those been implemented in the envisaged manner, there should be significant grounds that we would have achieved by this time. And having said that, the glaring contributor towards the slow pace of transformation, for me, is the tick box mentality by the reporting institutions or the financial entities, where they focus on point scoring instead of focusing on the core transformation initiatives. A case in point, which the governor mentioned in his input earlier on, is around management control. Management control recognizes the notion of inclusivity where it involves blacks as well as colored communities as classified as black people. And level 1 entities deem themselves as compliant. The governor also spoke about compliance in his input. They pride themselves around compliance, but that is not reflective of our own demographics in this country. Also, Leila, if you look at the current code and its formation, the design doesn't allow for true transformation to be considered. It looks at according frivolous points towards transformation measures. Say, for instance, if you look at around the element on socio-economic development, of which its targets are often exceeded by financial institutions, whilst other core transformation initiatives are left out in advancing a transformation within the sector. Of course, the lack of significant growth as well as the volatility of the sector is often cited as another inhibitor towards a transformation. And I believe that much could be done in terms of allowing new entrants within the space to flourish in terms of growing their own initiatives. Also, the financial institutions relegate transformation to junior managers within their respective institutions. And transformation doesn't land itself in the strategic discussions within their various boardrooms. The governor spoke about the cost on lack of compliance. And I don't think as a country we've paid much needed attention towards this, because there's no punitive measures that are appropriate for the sector, which will then allow them to consider the implementation of the FS code in terms of how it has been designed. There's also issues around lack of requisite skills when, as the industry argues that the reason that they are unable to transform to the full extent is the fact that there are no requisite skills. On the other hand, the workforce argues that opportunities are limited. There are no significant opportunities that they could look into. Also, the issue around the cultural dynamics within the workplace, those pose challenges in terms of achieving the desired targets within the space of transformation. So I would sum it up in that manner, Leila.
Phumla, thank you so much. Really insightful thoughts. And I think particularly importantly, you comment on the tick box mentality over core transformation, the real importance of management control and lack of growth being a key contributor, and the need for new players. Also, creating opportunities to enable skills development are really important points that you mentioned. So thank you for those, Phumla. I'm going to turn now to our banking executives, Lungisa and Kennedy, otherwise known as KGB. The banks are really one of the biggest employers in our private sector. And over the years, very good progress has been made by the banks in respect of black directorship and representation across some levels of management. However, transformation is not just about numbers. The issue of inclusion is important and topical, especially given the recent resignations of black chief executives in certain financial institutions. Kennedy and Lungisa, what do you think should be done differently to transform the culture at the top, board and exco, to promote meaningful diversity and inclusion, and to just stop the revolving door for black women executives? Let's start with Kennedy, and then we'll move across to Lungisa. Kennedy.
Thank you, Leila, and good morning to panelists and to the audience. I think, Leila, you should have always started with the big banks. Lungisa ahead of me, but we'll accept the challenge. And I think really it is important to start where the FSC CEO has landed us and the challenge given by the governor. That the FSC almost 20 years ago was by all definition groundbreaking in defining the measure of transformation in the pillars that it did, beyond just ownership, beyond just management, to access to finance, to funding of SMEs, low-income housing, funding of BEE finance, funding of transformational agriculture, etc., etc. But as groundbreaking a success that it was, we should also identify that it was based on a qualitative scorecard. And by its own definition, a qualitative scorecard would require, measurements and tick the box, and that's what we've done okay up until now. But it was not, what it didn't have was quantitative measures. And I believe that if you look today at the BASA report that was referred to in the opening speech, reflecting most of our banks being in level 1s and level 2s, you'd think we've charmingly transformed the sector. And yet the reality is that we have not. The analogy that the governor makes about the heart in the body representing the financial institutions in an economy shows that we've not had inclusive growth. We have not moved the dial in terms of inequality. We've not moved the dial in terms of extending credit to the majority of our people to come in as actors in this stage. And that says to me there is something not adequate with where we've ended up with the qualitative scorecards in our financial sector charter and code. I think that there are two aspects of a quantitative measure that we should bring in that could help us here. To look really at the essence of what financial institutions do and how we can measure them in terms of what we have defined to be a need for transformation. How credit extension decisions are made and by whom, how the advancement of capital into entrepreneurs, into investments, into SMEs, into black-owned owned businesses, into women-owned businesses, how the vast resources of financial institutions are deployed in different divides of this country, beyond just race and gender, into the rural and urban divide, into the demographic of youth and older demographics. We need to be creative in coming up with those quantitative measures so that we can put the spotlight on whether these level 1, level 2 financial institutions have in essence changed the way they work. The other point I want to make, and there's just two more to make here, is that and it goes to this issue of the culture of the organizations. I think we might have fallen into a trap in the FSC, the Kwame Nkrumah trap of thinking that, as he did say in the 50s, seek ye first political power and all else shall follow. We sought first black management representation and thought when our institutions are led by black people, by women, they will transform. Well, it is evident that it doesn't follow automatically. And many of our brothers and sisters can be lured into co-option and just perpetuating the status quo in the big roles that we occupy. And we've got to be truthful here and put ourselves on the test as to whether we are holding each other to account in how we change the artifacts of our organizations, the set of beliefs in these financial institutions, and what success looks like, and whether we are actually transformative in terms of moving the culture of these organizations to act differently, to be different, because it doesn't help that an institution that moves from being led by a white male into a woman or to be led by a black person, but it remains as is. The ways of doing business do not change and the culture doesn't change. We need to actually start taking some responsibility here and start measuring each other and giving feedback where it's necessary. The last point I want to make, and I think this is maybe an even bigger point, is that we are now facing what I call transformation with a big T. The advent of the Fourth Industrial Revolution, the rapid digitalization of banks, the transformation of financial institutions and banks into platform banking can really, has been seen in other parts of the world, to really leapfrog access for majority of the populace in quite a short space of time. I am worried that if we do not address quantitative measures of transformation, even this big T transformation will miss our people, will miss SMEs, will miss Black and women-owned businesses. We've got to take a conversation to that level, I'm afraid. Thank you.
Thank you. Thank you so much. Really, really insightful views, and indeed transformation with the big T, and shifting from quantitative measures to real genuine transformation on the ground for SMEs, women-owned businesses, etc. So let's move to Lungisa. And so we've gone from an inclusive approach with going with one of our smaller up-and-coming banks to one of the largest banks on the continent. Lungisa.
Thanks, Leila, and thanks to the organizers of the event for inviting me. I want to be a bit contrarian here. It would be easy and convenient for me to agree with most people that everything hasn't worked. And if I were to do that, and I mean it sincerely, I would have been dishonest, because I don't believe that that is the case. I want to say that in actual fact, we have made a lot of progress as the financial services sector. You can express it in numbers. You can show, even on the contentious issue that the governor raised earlier on, and correctly so, of ownership. There are changes that are worth acknowledging there that occurred because there are the country's laws, one that require that, but there is also an acceptance amongst the leadership of the financial services institutions, many of whom grew up in South Africa, some of whom were or are part of the historically disadvantaged sections of our society, some of whom are actually Black. You have got a number of them who participated actively in bringing about freedom and therefore care dearly and sincerely about making sure that transformation occurs, inclusion happens in meaningful ways. But I want to say that transformation is hard. It is difficult. It's a difficult project. It requires persistence. It requires perseverance. It requires resilience. We mustn't, simply because we realize that perhaps the scorecard was not the best way to measure our progress, then all of a sudden throw our hands in the air and say everything hasn't worked. We can't do that as people who are in leadership positions that we hold. Some of us very powerful in terms of writing rules that people have got to comply with. And then you say, when people have complied with this, it means little, it means nothing. I mean, you can't do that as a leader. What we've got to do is to say, like Kennedy was suggesting, okay, we had hoped that we would be able to measure progress meaningfully through the scorecard. It's not doing everything. What is it that it is not doing? What is inadequate about it? And how can we then improve it? Or is it totally flawed and therefore we must throw it away and try something else? But lamenting doesn't get us anywhere. Now, what I like about our system, for instance, today, Zodwa would know this, I would be meeting the BE Commission's people. And what is good about that is that we will be talking as South Africans who share certain aspirations. I don't expect that the conversation will be smooth and we will agree on everything. But I am very hopeful that it will begin to take us forward in terms of saying, we have done what we have done, but what is it that we could do more of? Now, one of the things that most banks have done, and I can speak about Standard Bank, is to understand that if you run the same processes, for instance, credit processes, like you have always run them, with the same people, applying the same criteria in exactly the same way, you wouldn't go too far with making some change. And of course, we've made adjustments in a number of areas. I don't have time to talk about them, but people can ask me about them, I would do that. Including, by the way, having different kinds of products that are meant to respond better to some of the specific needs that relate to the targeted categories of people that we seek to empower. Now, if you ask me, have these worked spectacularly well? My answer would be, the situation is mixed. In some instances, some things have worked reasonably well. And of course, we continually improve on these to make them better. What has been difficult, though, and I will end on this point, what has been difficult, and I've attended most of the conversations at NEDLEC, I attended I think it was called a symposium at the CSIR on transformation, not long after I joined the bank. Yeah. The conversations are like between deaf people. People were insisting, we want ownership. And we spent 2 days talking about ownership and nothing else. I felt it was a waste of my time. I suspect that many people share that view, because we were talking about the part of change where we almost cannot move again by just the nature of how, and ignoring the parts where we stand a chance of making real and meaningful progress. We didn't talk about them.
Yeah.
So we need proper conversations, and we need to acknowledge that they will be necessarily difficult. But if we yell at each other, swear at each other, castigate each other, and cast aspersions on each other, we won't make progress. Yeah. We simply won't.
Thank you so much, Lungisa. Incredibly insightful comments. And indeed, we need courageous conversations, and we need genuinely meaningful compliance. Before we turn to the governor, I'm going to just quickly ask Sipho from ABSA to tell us a little bit about what transformation should look like from the top. So what should the role of boards be in promoting and ensuring sustained transformation? Please share your views from the practice of ABSA, Sipho.
Well, thank you very much, Leila, and thanks to the organizers for inviting me. I'm not sure that I'm as authoritative as all that I can give you such detailed feedback from the experience of ABSA. But I can tell you that a great deal of what the financial services sector experiences is not too dissimilar to what is experienced in broader corporate South Africa. If you look at the challenges of transformation, if you look at just issues around employment and employment equity issues that the governor spoke to. So clearly, the legal framework, the regulatory framework is quite permissive. It enables institutions to do their own planning, set targets. We're not a society that insists on quotas. It enables gradual development and all of those kinds of things. It's the point that Kennedy was talking about, which is about a focus on quantitative achievement of these things that we focus on. But so many people in leadership positions and so many people in middle management positions, etc., etc. Where the rubber hits the road, actually, is on the qualitative aspects, the culture issues. If you look at most corporations, including the banking environment, there is a culture of sponsorship and promotion. So you have leaders who have confidence in certain people who display certain qualities. They propel them, they speak about them, they enable their career development, they become something of mentors, if you like, and et cetera, et cetera. And that affirmation enables their stay in the system, enables their promotion, enables a sense that they can be dependent on, etc., etc. So similarly, from my perspective, we need to invest a lot more effort at looking at what are the qualitative issues that we need to be talking about to build on the progress that has been made, which I think Lungisa correctly points out has been a good progress, but it's an inadequate progress nonetheless. So we need to invest more efforts to make sure that where we're losing people from the system, where we are finding people that are not really feeling that they are affirmed by the system, we need what else do we need to do? So from the board's point of view, this is something that we focus on a great deal. Most social and ethics committees will be looking at these issues. We also have to look at issues of patterns of discrimination, by the way. I chair the remuneration committee of ABSIP. I look at a great deal at Gini coefficiencies in the pay differentials in that environment, and the race and gender dynamics of that, and how they manifest in entrenching a culture of discrimination. When you're looking at bonuses, you interrogate issues about why does the profile of bonus distribution tend to be racially or gender skewed. All those conversations begin to temper the culture of how you look at issues of transformation beyond the issue of this is the target that we want to have in terms of the number of people that you have in the system. So the board's responsibility is to use the various platforms and the various conversation points to set the tone about where transformation fits, to set the tone, including on issues to do with how much credit we extend to the vulnerable and those that can be mainstreamed, etc., etc. So we have the range of fora where we can enable banks, our institutions to begin to focus on the critical issues.
Thanks, Sipho, and very, very profound and insightful. And the rubber truly does hit the road in the cultural dynamics, and looking at racial discrimination and gender discrimination in bonus allocation, I know is a particularly important topic at the board level. And I'm pretty sure that everybody on this panel has had to navigate that. I'm going to turn now to the Governor. Governor, I really enjoyed your insights, as always, at the beginning of the session. Transformation starts and ends with leadership, and as such, regulation has a really key role to play to enact change. What out-of-the-box approach do you think should be taken in regard to regulations and licensing to address our specific transformation opportunities, and to make it easier to issue banking and other FSP licenses to Black and women-owned entities?
Leila, asking a regulator to think out of the box is asking for the impossible. Our job is to create boxes so that you operate within the boxes. So when you say we must think out of the box, you are saying we must stop regulating. So we set global standards of regulation. We participate in those. And then we move on and we say, at a country level, how do you translate this international standard into domestic law? And it is so for a reason. Banks are playing in the global financial system. And if you are playing in the global financial system, let's get things clear. You play according to those rules. So you can't say, I want to play in the Premier League, but I want to be judged according to the rules of the second division. It doesn't work that way. So there is this narrative that says we issue licenses. Quite frankly, it's not like we issue license. We license you because you applied for a license. There isn't a bunch of licenses that are waiting to be dished out, and then you say, how many have you given to this one? How many have you given to that one? No. Anyone who meet our licensing conditions can submit an application and we will license them. What you can't do is to then bifurcate the regulatory framework and say that because we want to do something for women, let us have different rules for women. We want to do something for youth that have different rules for youth. No, you have got the rules for everybody. What you consciously do is to support those applicants when they come to you. So there was the work of a young women's bank, the post bank, a lot of people who apply for licensing, we assist them in the licensing process. Lastly is that I have mentioned the issue of the Innovation Hub, which for me, that is where the disruptors are actually coming to be playing. And it has to do with the use of technology in financial services, sometimes referred to in fintech, which I choose to call tech-fin, because in interacting with many of these people, they know a lot about technology, but they understand very little about the financial sector. And hence our Innovation Hub has got a regulatory guidance unit. It has got an innovation accelerator so that people can move with speed to go and do these things. The general approach here is, if it walks and quacks like a duck, it will be treated like a duck. So if you are playing in the regulated space, if you take deposit, but you use technology, we will regulate you like a deposit taker. If you are remitting money, we will treat you like a money transmitter. And if you provide credit, we will treat you like a credit provider. What is important to notice here is that many of these young and emerging players, they are nimble. They do not have massive infrastructure costs like branches and so forth. Yes, they use technology, and that is the space where they begin to play. The licensing process for these ones, because they really just ask to play in one space or the other, is actually pretty fast. And just to say that we have made a lot more progress in the insurance sector than we have in the banking sector. In the insurance sector, that's because of the nature of the sector. That you have got insurers which come in and maybe just want to provide funeral cover, and others just wants to insure cars, others just wants to insure house. So it becomes easy in that space. Banking had been a different ball game. The banks that are coming through have been the ones that are relying on technology. And sometimes I hear our political leaders bemoaning the fact that bank branches are closing. And I ask the question, and I ask all of the panelists here, I will challenge you, those who are not from the bank, but even those who are from the banks, to say, when was the last time you visited a branch of a bank? To do what?
Yeah.
Because the bank is here.
Absolutely agree.
That is where people are banking. They are using technology. So the nature of banking is changing significantly, and it's the same story across the financial
Yes.
the financial services. So let me leave it there, Leila. I'm sure you will enjoy the rest of your panelists, and just to say that the figures that I gave you, we have made significant progress. And as we say that, this is not enough, we have got better banking penetration in terms of access to finance than many developed economies. It is something for us to celebrate as South Africans.
Thank you, Governor. Yes, very insightful, and thank you for your in-the-box response. And Governor, indeed, we need conscious support. We can't change the rules. The rules must be equal for all, but conscious support, leveraging that innovation hub, and also leveraging technology, because technology will enable inclusiveness. In fact, we have one of the highest cell phone penetrations in the world. Of course, we're shifting to smartphones, and that will enable inclusive growth. Now, I'm mindful that we've got many panelists, and we still haven't heard from Zodwa and from Abel. So I'm going to just very quickly go to Abel and then hand over to Faith to chat to Zodwa. So Abel, as the CEO of PIC, you are a significant shareholder in most of the bank's insurance companies and JSE listed entities. And from the current transformation at the level of boards and executives in the institutions, we see that it's not at the level that it should be. What do you think are the 3 key hindrances in meaningful transformation of boards and the exco of these companies?
Thanks, Leila, and again to the organizers for inviting me to this particular discussion. So what does the PIC do? That's quite interesting. So the PIC, like banks, we are intermediaries. We are repositories of funds, substantial. I mean, there's no gainsaying that we have this huge amounts of money that we have at our disposal. But the important thing is that we do not actually generate economic activity. That is done by other entities. It's done by entrepreneurs. It's done by existing companies. It's done by people who already have companies that actually exist. And by and large, what we do is to provide the capital and for those people to actually deploy it in productive and in meaningful economic activity. What we do is to encourage our investee companies to have the boards that are able to represent the ideals that we as the PIC and we as the PIC within South Africa with particular aspirations given its past wants to achieve. So talking about the transformation of boards is to insist that the companies that we invest in work towards transformation at the board level. And we're hoping that when that happens, the board then takes the mantle and ensures that the board appoints transformed executives. And then executives then, of course, also do the same, appoint a transformed overall structure of employees within each organization. So you're looking at a cascade. And then this goes back to what both the governor and Gloria at the beginning said. It's about each of us accepting the agents that we have in each of the positions that we hold. Not to be simply asking what is somebody else doing, but to say what are ourselves doing, because as you are asking as a Black CEO of the PIC, what are you doing to empower other Black CEOs in other entities? What are you doing to empower Black women CEOs and the likes? Each of that question should be cascaded in all organizations all the way down, because each of us have a role to play and should take ownership of the role that we can play in the roles that we are actually playing. And I think that's, I'm paraphrasing what Gloria said about what are you doing? And I think that the governor did the same. What are you as management doing? Because again, when we talk about why transformation is slow, we are here. What have we done? What are we going to do into the future? Because it becomes very, very important in making sure that transformation cascades throughout our organizations, our sectors, our industries, and throughout the country. Again, so the first emphasis is about each one of us owning up that which we actually can do and doing it. I think the word for that will be agency. And it's not to always be victims. Why is somebody not doing something? Why is somebody not creating the change that we want? No. What change are we creating that actually benefits other people, who in turn create the change that benefits other people and have that cascade throughout the whole economy. I think to me that's the important part around what, as the PIC, we're actually requiring our investee companies and actually wanting that to see that cascade. The second point that I want to make, and I think we talk about the big T and the change in transformation, I think what is the top of my head is the fact that the financial services sector, according to the last numbers that I saw, lost 278,000 jobs over the last couple of quarters. Now, why is that important, and why is it important to transformation? Again, if you think about the PIC, you think about banks as channels of money from savers to borrowers who then consume and create economic activity. If you are losing jobs, you are losing the ability for people to consume in the first instance. But more important, of course, you're creating unemployment, which in itself is a challenge. But what it's telling you is that the economy is becoming less effective at becoming the producer of goods, the producer of services, and doing those things that are actually important to ensure that the economy actually does the transformation that we want. If I were to look at the 278,000 jobs that have been lost, the majority of those are likely to be Black, women, and because it's the financial services sector, it's likely to be women and Black women in the main.
Yeah.
Now, we can talk about transformation for those of us who are still in the economy, but while the economy itself is shrinking, there's a bigger challenge for society in a sense that, yes, we can have transformation for the few who are remaining, but for the majority of the people, transformation actually is losing meaning because, well, there's no food on the table. I think those are the two issues that I would actually want to contribute. Thank you, Lila.
Thank you so much, Abel. Really, really insightful thoughts, and you know, the concept that everybody must take ownership, and it's to grossly paraphrase a well-known quote, ask not what everyone else can do for transformation, but ask yourself what you can do. I'm now going to hand over to Faith, who is going to look at a couple of questions for Zodwa, and if we have time for other panelists, although we are running low.
Thank you, Leila. It's really good to be here this morning, and it's good to see old friends and colleagues. Zodwa, I would like you to weigh in as the BE Commissioner. We are still on the topic of accountability. From where you sit, have there been tangible consequences for those who have failed to meet transformation requirements? And how does the Commission plan to enforce the Act more stringently? Thanks, Zodwa. If you may please just come in.
I think we must go to the wrap-up.
So, Zodwa, are you...
Sorry, I just had to mute myself.
Finding the mute
yes,
button.
Thank you very much. Just want to thank IWF for the invitation together with its partners. I listened, and I think it's a good opportunity to be part of this session, because what has transpired and which has consistently been something that is of concern, I think when it comes to economic transformation, and I know that we spoke, there's a mention about the big T. I think it should be the big ET, because once we drop the economic transformation part of it, the economic part of it, then I think we lose sight of why we're doing this. The whole purpose around economic transformation is about closing the inequality gap in South Africa. And one of the core elements of that is really putting in place measures that are going to change the ownership patterns, the extent to which Black people own and manage and control enterprises in South Africa, whether those enterprises are their own enterprises that are going to be grown through this process of economic transformation or through the acquisition of stakes in existing entities. And I think we should not lose sight of that. So now, having looked at that as a country, in the framework, it was decided that there would be elements that will be priority elements. Ownership is a priority element. Enterprise and supply development, as well as skills development, are priority elements, because those are the things that are going to significantly contribute to taking us to that particular point where we are able to close the inequality gap. So I think I just wanted to put that context that with the triple BEE particularly, what we find is that in various quarters, people want to interpret what triple BEE is or what economic transformation is according to what they personally think it should be. Regrettably, we actually have a framework that is on the table that sort of says to all of us, this is the framework, these are the elements that we're going to be measuring. And if we're saying ownership is a priority element, it is a priority element. If we say skills development is a priority element, it is a priority element. And this is the framework. And as the governor indicated, certainly this is the box that we've got to work with because we are monitoring adherence to the framework and the regulations that government has put in place. So I think it is important that we just set that context. Now, speaking to the financial services sector, this is a significant sector for the economy. The governor has already talked about the issues around financial inclusion. A whole lot of economic activity would actually not be possible without the financial muscle and the financial abilities that are extended by the financial sector. So it plays a critical part, and the pace of transformation within this sector needs to happen and set an example for all of the other sectors that actually are influenced by this particular sector. So if we look just in a glance quickly, in terms of the monitoring from our side as the regulator, our job is to monitor that the various entities do implement these initiatives in a manner that is consistent with the requirements in the codes, the codes of good practice, as well as the sector codes that have been approved. The financial service sector is the one that has got a sector code. So now if you look at the financial services sector in terms of ownership, we have regressed. We are at 15% in terms of the 2020 report. We're at 15% in terms of Black ownership and only 7% in terms of Black women ownership. We've regressed from the 2017 figures where we were sitting at around 31% in terms of ownership as the financial services sector. So I think it should be very clear to us that there's something that is not working and that is not working properly, and we need to fix that. And in terms of just the management control, we have also regressed there. We have moved in 2017, we're at 52%, and we are now at 44% as the financial services sector. And this is actually evident because we've seen the dropping of Black professionals that have lost positions, and that actually creates the regression that we should be concerned about as a country. And now, if you look at, as I've indicated, in terms of the contribution of this sector, the contribution of this sector for economic transformation within the context of triple BE for us is measured also in terms of the extent to which the financial services sector makes available funding for acquisition and of stakes in triple BE transactions. So what we've seen in terms of our 2019 figures for transactions that have taken place, only 19% of the funding that was made available to Black people came from the financial, from the banking sector itself. The rest of the funding has come from other avenues, including the vendor financing model. So now, if you look at that and you are saying, what is it that we're not doing right? What we are not doing right, firstly, is there is lack of commitment. Because the lack of commitment in doing what? In implementing the rules that have been put by government on the table. That why there's lack of commitment? Because people just do not have the buy-in to actually implement that. They do not support the transformation agenda as set out in the framework that government has put in place. And that needs to change. I think we do need a change of a mindset. In terms of in terms of the private sector and the public sector, we need that change of mindset to actually implement economic transformation in the manner that it should be implemented. The stakeholders that have got a role in doing this, key to that, government is particularly important in that. The licensing processes of all the regulatory bodies in South Africa that are organs of state, must take into account and put condition for transformation in those. That is what the BBBE legislation requires. So that part has not been implemented. So now, in terms of some of the tangible in interventions that the Commission has done since its establishment, is to look at those areas. For instance, in the matter that we had to deal with in terms of the ESCOM Duva power station contract, that was worth 4 billion, where basically the process for appointment of the service providers for that overlooked the BBBE requirements and appoint a completely non-compliant service provider. So now the legislation allows us, when the BBBE rules have not been adhered to, it allows us to recommend termination of those contracts. Where it is a license, it allows us to actually look at the termination of those licenses. And we do believe that this is the area that is actually a leverage to advance economic transformation, because if there's no consequence for non-adherence, but there's also no consequence for not transforming as an entity, then we can forget about any entity transforming, because they will sit and just do things in their own pace. So I would like to say, Faith, that in terms of basically those tangible things that we are looking at as the Commission, is looking at continuing again with the advocacy, because we need to be on the same page. And I do believe that even with these platforms, that is the opportunity that we are being presented to advocate and ensure that everybody is going to consistently implement the legislation. The second thing that we have been doing, as I've indicated, is to enforce the termination of licenses and contracts, and we have recently also referred the cancellation for the fishing rights that were awarded to African tuna traders in Cape Town, which has been actually violating the BBBE legislation by fronting its workers and making them look like they are owners in the entity. The last thing that I just want to also indicate in terms of just what we are doing in terms of tangible result of that, is that in terms of just the reporting, we spoke about the qualitative aspects of measuring, and the regulation requires the annual reporting to the Commission so that we can have the data to measure the progress. One of the things that we can actually say has worked is coordination with the other regulators. For instance, with the JSE, the conversation and constant conversation that we have in terms of promoting and encouraging compliance by the JSE listed companies is beginning to give us results. And we are coordinating with the various other regulators, the sector councils and so forth, to make sure that we can actually encourage that. So I would like to just end my input by saying that of course, you know, the transformation as an agenda itself is a complex one. But I think we should be guided by what is it that we need to be doing. If we've got any other ideas, let them be in addition to what the framework of government is. And we are really happy so far that the conversations are beginning to show us that a lot of entities are appreciating what needs to happen and what should be happening. Fronting continues to remain a challenge. So we've got a challenge around the quality of the initiatives being implemented. We've got an increase in terms of the companies that are at level 1 to level 4, but then the quality of what is being reported does not reflect those transformation levels that have been projected. So we need to improve on that, and that's what the Commission is now doing, conducting site visits to various entities to check the level 1s and the level 2s that we are now increasingly seeing. So that is the role of the regulator, to be in a position to monitor and ensure that we are able to give feedback to the country. Thank you.
Thank you very much, Zodwa. I think, I think in terms of what you are doing as a commissioner, it's really commended. And again, I think we're saying that we have made significant progress as the sector, but there is much more that we need to do, and we cannot do it alone. We need to collaborate. So just before we close the session, because we really are running out of time, I would just like to ask each of our speakers to really offer your final soundbite. We've got 30 seconds. You need to tell us what is the key transformation lever that should be pulled so that 10 years from now, we've got the South Africa that we all want to see. Please. May I start with you, KGB?
Thanks, Faith. We need to build from the qualitative measures that we have, a set of build from the quantitative measures that we have in the scorecard. We need to build a set of qualitative measures to look at culture, to look at the essence of transformation in the financial institutions that we have. And lastly, this is a moment that cannot be missed. We need to ensure that we find creative ways of the fourth industrial revolution, the digitalization of financial institutions, not to leave our people behind. It is in our hands and in our gift to make it happen. Let's get on with it and hold each other accountable. Thank you.
KGB, Lungisa, your point?
Zodwa makes a very important point earlier on, and I want to agree with her. The financial services sector, banks like our own, with massive capital base, massive customer base, one of the things that we should be challenged to do, and we're trying to do it on our own, but it would be good if we were to be challenged more, is to enable Black people, and within that broader category, women, to be able to own parts of the economy, whether as shareholders in existing companies listed on Leila's Stock Exchange, or owners of businesses that they start themselves or they buy from others, helping them buy the businesses and walking the journey with them to make sure that those businesses succeed, be it by structuring financial instruments that are friendly to the kinds of businesses that they run within what is commercially sound and sustainable, or about connecting them to the markets for their products in ways that ensure their success. It is so important to do that, to enable Black people to own bigger and bigger parts of the economy. Now, this is distinct from owning the financial services businesses, which can be pursued in and of its own. But I will tell you, because they are listed, they are complex animals to own, in the sense that Lungisa buys the shares today. If he needs the money, he liquidates the shares tomorrow, and he doesn't often have to know who the shares move to. And that takes us back, as the statistics that Zoda was quoting suggest. So I think that these two kinds of ownership, whilst both can be pursued, the one about helping Black people own larger parts of the economy is, for me, something more important and something that banks can contribute the most towards.
Thank you, Lungisa. Sipho, we really have run out of time, but let's hear you.
Well, quite briefly, I think that Pulu's concept of a white paper is an exciting one, because it says we've traveled this journey, we've made some progress, there is room to make more progress. What does that journey look like? What are the elements of that? Where are the levers? We have agency, much greater than where we were when the Financial Services Charter was first adopted in the early 2000s, in that we have leadership in large measure that no longer debates the efficacy of transformation, but in fact is actively in search of what the best way to do it would be. So I would hope that the white paper that Pulu has promised would be a starting point of a conversation of like-minded people to develop a program and a plan to execute, because transformation only works when you have deliberate and deliverable, measured outcomes that are determined, and with everybody knowing what their role and contribution is. So I think we're in a very fortunate place. I think this conversation suggests that it is possible to work together in a mutually reinforcing way to execute in advancing the gains that we've achieved so far. Thank you.
In the interest of time, I'll have to thank all of the speakers for their insights this morning. We really appreciate all your thoughts and your commitment also to transforming this sector. Thank you very much.
Thank you and bye-bye.
Thank you.
Thank you very much. Bye-bye.
Thank you.
Thank you.
Bye.
Thank you all so much.
Thank you. Bye-bye.
Bye-bye.
Thank you so very much to all our speakers, and thank you for being so candid. I think this was an absolutely important conversation, long overdue, but I think timely in the sense that, and I like what Ntate Pichana said right at the end, where he said that putting together this white paper that we are proposing to put together suggests that there is some progress that has been made. And indeed, we are not saying that we are throwing the baby out with the bathwater. The idea is not to suggest that there has been absolutely no transformation, but the point is to bring sharply into focus the fact that it has not quite translated in the manner that it was originally envisaged in its fullness. Yes, we now have black professionals across various levels within the financial services sector. Some of them are CEOs. We are still not seeing enough women, of course, at the levels that we should, but we still have to raise the question to say, the financial services sector is supposed to be a driver of transformation across the whole economy of South Africa. And until the products and the services it provides are responsive to the transformation needs of this country, we will not see the level of transformation that we need to see across the economy. And I think everybody in this conversation today agrees with that. I also think that what the conversation for me surfaced and perhaps confirmed as something that we had been thinking about is that we probably need to be spending a little bit more time on the qualitative aspects of transformation, because even in the transformation series conversations that we've been having, certainly the issue around culture, the issue around essence, the issue around, if I work for a bank in South Africa that is a level 2 BBBE contributor, as a black woman, do I feel that the culture recognizes me and I can relate to the culture? Or is it just an island of the West in the sea of Africa? Because that is a problem. And these are the conversations that we really want to start having. Some of the things that have come out in previous conversations and I think have made their way again into today's conversation is around, once we are in these positions of influence and importance, what then do we do as black professionals? And it's a very difficult and uncomfortable question to raise, but it's an important and critical question to raise, because if we do not then use and leverage the positions that we occupy that have been enabled by the legislative framework, then we actually will see the regression that we are starting to see. It means that when we become CEOs or executive directors or CFOs or whatever it is that we are called in these institutions, we almost become part of, we assimilate and fit in and don't challenge the status quo and say, does this product really respond to the needs of the people? Things like, and this is what the governor spoke about earlier, which is a very important thing which I think we need to be thinking about. And I think KGB, your point around 4IR and the opportunities it presents to us today is, whilst we have this 81% banking penetration, and while 9 out of 10 South Africans are now starting to use financial products, the problem is, are those products going to create wealth, as an example? Are we seeing the uptake of wealth products amongst your black South Africans, as an example? So just because we are part of the banking system, does it translate into us actually having wealth products like other population groups, which actually not just, they don't just use banking services or transaction services, they don't just take funeral cover, but they also have investment products. Are we seeing those kinds of things? And maybe through technology, and these are the things, KGB, that maybe we will come and knock at your door and have a conversation about, to say, what kind of things should we be thinking about in terms of coming up with the innovative financial products, taking advantage of digital technology and where it has brought us. And I think, the point about the fact that there have been more than 278,000 jobs lost, and the fact that until even today, when we say we are transformed, the people that get affected the most are still black people and black women, again is a cause for concern, because it talks to the quality of the jobs, now that we are in the system, are we occupying critical positions that make it important for us to remain there regardless of what's happening in the economy? Or do we occupy positions that can very easily be made redundant because of the economic situation that we face? So we need to really dig deeper into what that kind of development is communicating to us. And I think, Zodwa, you make a very important point about the framework is there. And even though we are still having level 1s and level 2s, within the financial services sector, we're still seeing a regression. So even before we say whether we are throwing the scorecard out or in or whatever, the fact of the matter is that even with the current scorecard as it is, we're not seeing compliance. And that's part of the reason why maybe it's not translating into the qualitative issues or outcomes that we want to see. So we need to go back and think a little bit more creatively around how do we strengthen the sanctions. And I certainly didn't know that the Commission had the ability to cancel contracts or licenses if people were non-compliant. So how do we make sure that we actually understand the sanctions that the Commission has available to it, so that when we see such situations of non-compliance, we are able to then work with you as a Commission to say, Commissioner, this is what we are seeing. Can you please step in and see how you make sure that we ensure that there's better compliance? And I think that agreed with you that the whole conversation we're having right now is not to say we are throwing out the scorecard. We are saying the scorecard has done what it can do, and it's got its limitations because it's input focused. We need to be thinking about what is the impact, and that's what we're debating, because we're looking at the impact and we're not seeing it. So how do we refine it further to ensure that it also takes into consideration the qualitative aspects, the impact, and so that we can say, yes, indeed, in 5, 10, 20 years' time, we have achieved our transformation vision. And with those comments and words, ladies and gentlemen, I really would like to thank you on behalf of ABSIP, on behalf of IWFSA and WDB, IH, as well as the JSE, for joining us on this very important conversation this morning. And I will now hand over to my colleague, Charmaine Huvet, who will do the closing remarks. Thank you very much.
So again, thank you to our joint partners, IWFSA, ABSIP, the JSC, WDBIH, the Governor of the South African Reserve Bank, all of our facilitators and our panelists who contributed to a very critical conversation around transformation. And I think one of the things that's coming through very clearly from all of the chats in the different social media groups is that it was a powerful, very thought-provoking conversation. Somebody actually said the fireside chat is on fire. But I also think that there's a very clear clarion call that there is still a lot of work that needs to be done. And there's a call for more clearer and very tangible action plans. And so, of course, I think to the joint partners today, everyone is looking forward to the white paper that is in the process of being finalized and articulated. And we'll come back for another round in a few weeks' time to start to share that process with everybody. And to you, our audience, thank you very much for joining us and for being so engaged. We wish you well on this beautiful spring day. Take care and stay safe, everybody. Enjoy the rest of your day. Take care. Bye.